Okay, so we're removing these. Let's talk about something that comes into play quite a lot, and we're going to go back to a daily chart for this and start off with the daily, and then we'll kind of go from there. A lot of people like to use what's called trend lines. A lot of traders like to look on their chart and get a visual representation of how strong or how weak each thing is. Let me just remove these here while we're here. I was doing something a little bit different. And they use what's called a trend line. Let's go back to the FTSE because we're all familiar with the FTSE. Many people are going to sort of be a bit more aware of that as opposed to the Dow. But ultimately, it doesn't really matter. It can be absolutely anything. So a trend line is, we all know what a trend is. If we don't, very briefly, it's an uptrend is a market that's moving from low to high. It could be like this. It could be like this. Really, trend is going to be something that's kind of a bit more like this. That's an uptrend. A downtrend is going to be from high to low in that format. We could be a bit more jagged, but ultimately that's what we're talking about. We're not really talking about a trend, something that's doing this. That's not really trending. That's more range bound or chop. So let's look at this daily chart on the FTSE. Now we're obviously in an uptrend here, but how do we kind of visualize this? Now this is very subjective. Some people are going to watch this and go, that's ridiculous. You don't draw the trend lines like that. And you know what? Honestly, it doesn't matter, guys. If you're making money out of it, who cares how you draw your trend line? It's purely a marker point. So you'd look at this and you'd say, you know what? The FTSE's been an uptrend here. I like to be a bit loose with my trend lines. I like to go, you know what? For me, that's my trend line. That is exactly, I'm happy with that. And I might even put a channel in, which is basically exactly as it says. You're kind of framing the trend and putting the downtrend, the uptrend lower line and the uptrend upper line in. And if you really want to go crazy and go one deeper, you can kind of put a mean in there and see the midpoint. And look, and you can see how just by freehand drawing, how we start to kind of put some boundaries in for the trade. Now, this is ultimately saying, hey, the market is an uptrend, and really the kind of common way of trading this is to say, listen, if I'm drawing a trend, let's get a better pen than that. We'll go for a nice red color. If we are in an uptrend, I'm looking to buy every time the price hits that lower channel, hits that lower boundary of the uptrend. So I'm going long here, I'm going long here, and I'm looking for it to move off. And it's the same if you're trading against the upper channel. Now, one word of caution. If you're in an uptrend, the best way to position yourself is on the long side. So the theory of using this is, listen, we're in an uptrend on this higher time frame, so I want to align myself with that trend. I want to stay long. What I don't want to do is to start going long at the upper end of the channel, because the chances of us going higher are much slimmer than they are if I'm going low at the bottom end of the channel. Now we're going to look at some smaller time frames in a minute, but let's just look at this visually of how, just literally from doing this from a 10-second eyeball, we can see how useful this kind of framework is. So we started out here, and again, some people are going to say, listen, you cannot draw it like that. It has to be very accurate. You have to kind of draw, exact point to point. Do you know what? I do not buy that. I do not believe that. Do you know why I don't believe that? Because this here was a one-off scenario. It was a day that, for whatever reason, we put a little tail in, a lot of activity came into the market, and we ended up printing low print. That could have been a handful of people causing that print. However, when we talk about a cluster of points like here, we're talking about millions and millions of contracts. To me, it makes far more sense to align yourself where the majority of prints are occurring, rather than being really accurate about it. Again, this is kind of subjective, but this is kind of where I want to put my trend line. This is where I would want to put my mean. This is where I want to put the lower end of it. And I've kind of gone from trend line to channel here in one fell swoop, but I think it's important because we can visualize this quite key. So the idea behind it would be, listen, we push up, we're buying at the lower end of the trend line, and I appreciate that I'm really oversimplifying this. There's more to it than this, and we're going to go into a bit more depth, but you can see how this kind of gives you a framework for a trade. Coming out of your long positions here, coming out of long positions here, or at the very least not getting caught going long, because this thing's come a long way. It's kind of come a long way. And actually something that many people don't do, but I think this is a great way of doing it, is to add a kind of midpoint of your trend line of your channel, because very often this is going to be a point where the market fatigues, it struggles, and look how many times we kind of struggled at it. It becomes a very, very key area. Here we went straight through. We came back up and tagged it. Here we went straight through. We've tagged it here. We've tagged it here. We've tagged it here. All from extrapolating out that kind of viewpoint. So let's go into a bit of a shorter time frame and have a look. Oh, very quickly while we're here, let's have a look at downtrend, because we've got to be fair and we've got to look at it all in the same kind of scenario. So straight away, I think you guys can see this as well. We're eyeballing ourselves a downtrend here. This here's a bit of a cluster. So again, we either choose to go up here or we choose to go, well, actually this kind of brings it in a bit better. We've got this downtrend here, almost that midpoint here. You don't always get a very nice, clean kind of zigzag in between your trend lines. Thank you very much. I'll draw my high and my low. You've got to be a little bit subjective here. You've got to play the game. There's the upper trend line, and we can quite easily draw that. And we may not even want to draw that lower trend line. We might be looking at that and say, you know what, we're kind of curve fitting that a bit. It doesn't really fit in. We broke through it. I like that because I can see that we are sticking with it is key, because we bounced off it here. We've struggled here, here, here. But some people may say, we don't need it, and which is fine. You don't have to have it. You can have that here. But then look where your trend changes, and this is where you kind of is another way of positioning yourself. You'll play trading with a downtrend, then ultimately, as the market, let's remove these if we can, so we're not colliding with the control panel. Bear with me while I remove them. Okay, there we go. So this is kind of what we get. This is why people love trend lines so much. You trade the downtrend, dong, 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 selling short every time we hit the upper trend, down, 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 down we go. All of a sudden, we break up through the trend line. So some people like to go long as we break the trend line in the opposing manner. So a downtrend going long as we break it to the upside. If we're in an uptrend, people like to see us breaking it to the downside and going short. But often you get this kind of retest scenario. So you get the break and then it comes back down and retests this. I know this was a bit of a wick scenario, but ultimately it probably did its bit to hold things. There's your downtrend. It's finally broken, and now people are starting to go long, and then we end up forming that uptrend. So there's a couple of ways of framing the trade with a trend line. Again, it's subjective, a little bit like support and resistance type of thing, but it's eyeballing it, it's keeping an eye on what's going on, keeping a boundary and a framework for your trades.